In the 1970s, if you looked at Sweden, you'd see a country in trouble. Taxes were so high that a famous children's author calculated she was paying over 100% of her income. Factories were slowing down, inflation was on the rise, and powerful unions could shut down entire industries, international investors. All whispered the same word, decline. And yet today, Sweden is one of the richest countries on earth. So how does a small, cold country of just 10 million people, sitting on the edge of Europe, end up richer per person than almost anywhere else? How does a nation famous for high taxes, generous welfare, and long parental leave also produce billion-dollar companies, global brands, and a budget surplus? The answer is a little uncomfortable, because Sweden didn't get rich by choosing between capitalism and socialism. It got rich by mastering both, and by being brutally pragmatic when the math stopped working. Right now, as governments everywhere debate spending, inequality, and growth, Sweden is constantly held up as proof that you can have it all. High taxes, strong safety nets, thriving businesses, and low corruption. But that story leaves out a crucial detail. Sweden was already rich before it built its modern welfare state. Let's rewind. To the late 1800s, Sweden was poor, very poor. Famine struck in the 1860s, and over 1 million Swedes emigrated to the United States. The country had little farmland, long winters, and a small domestic market. So it turned outward. Between 1870 and 1910, Sweden industrialized at lightning speed. It exported timber, iron ore, and later, steel. It built railways and invested heavily in basic education so workers could read, do math, and operate machines. This is when the companies that still define Sweden were born: engineering firms, industrial manufacturers, and eventually names we all know like Volvo and Ericsson. And here's the key. During this period, taxes were low. Government spending was small. Markets were relatively open. Entrepreneurs had room to experiment and grow. From 1870 to 1970, Sweden was one of the fastest growing economies in the world. Over that century, real incomes multiplied many times over. By the time the modern welfare state expanded in the 1970s, Sweden was already one of the richest countries on the planet. That's step one. You can't redistribute wealth you haven't created. Then came step two. In the mid-20th century, Sweden built what many now call the Swedish model. This meant high taxes, universal healthcare, free education, generous unemployment insurance, and strong labor unions negotiating national wage agreements. The idea was simple in theory: let markets create wealth, let the state smooth out the rough edges, and let organized labor ensure workers get a fair share. For a while, it worked beautifully. In the 1950s and 60s, growth stayed strong, inequality fell sharply, and social mobility improved. Sweden became a global symbol of stability and fairness. But a system that works in one era can quietly break in another. By the late 1970s and early 80s, the cracks began to show. Government spending ballooned to over 60% of GDP. Marginal tax rates for high earners shot past 80%, in some cases. Entrepreneurs faced tax rates so high it barely made sense to expand their businesses. Investment slowed, productivity growth weakened, and capital began to flee the country. Then the real shock hit in the early 1990s. A housing bubble burst and the banks were overexposed. Sweden's currency was under attack. The government tried to defend it by hiking interest rates to absurd levels. At one point, the central bank briefly pushed a marginal rate to 500% to stop speculation. 500%. It didn't work. The currency collapsed. GDP fell by about 5%. Unemployment, which had been below 2% for years, surged into double digits. The budget deficit exploded. For a country that prided itself on stability, this was a national trauma. And here's where Sweden did something rare. It reformed, not slowly, not symbolically, aggressively. Taxes were overhauled in 1991. Marginal rates were cut, the tax base was broadened, and corporate taxes were reduced to encourage investment. Capital income was taxed separately at lower, flatter rates. Government spending was trimmed, and welfare programs were adjusted to be more sustainable. A new fiscal rule was introduced, requiring the government to run surpluses over the business cycle. An independent central bank was established with a clear inflation target. Sweden didn't abandon its welfare state. It redesigned it to survive in a world of global competition. At the same time, markets were liberalized. Telecoms, energy, transport, even parts of education and healthcare were opened up to private providers under public funding. They introduced competition without fully privatizing the system. This is the part people miss. Modern Sweden is not a pure socialist economy. It's a high-tax, market-driven economy with strong institutions and strict budget discipline. Today, government spending is closer to 50% of GDP, not over 60%. Corporate taxes are competitive by European standards, and public debt is relatively low. And then there's innovation. Despite its size, Sweden consistently ranks near the top in patents per capita, research spending, and startup creation. Stockholm produces more billion-dollar tech companies per capita than almost anywhere outside Silicon Valley. How? Part of it is education. Universities are publicly funded and accessible. Part of it is social insurance. When healthcare isn't tied to your job and basic needs are covered, people are more willing to take entrepreneurial risks. Failure doesn't mean financial ruin, and part of it is culture, high trust, low corruption, and transparent institutions. When people believe the system is fair and that their taxes are used, well, they're more likely to comply. But there's always a trade-off. Sweden's tax burden is still high. Value-added tax makes things expensive. Income taxes are steep. Housing shortages in major cities have driven up prices, and integrating immigrants has proven difficult, putting pressure on public services. The math never disappears. It just changes form. High spending requires high productivity. Generous benefits require a broad tax base. An aging population means fewer workers supporting more retirees. So when people say, why doesn't every country just copy Sweden? They're ignoring the sequence of events. Sweden got rich during a long period of pro-business growth. It built world-class companies first. Only after achieving high incomes did it expand redistribution at scale. And when that expansion went too far and nearly broke the system, it reversed course. It's not about ideology. It's about iteration. There's a quiet irony here. Sweden is often portrayed as the opposite of market capitalism, yet its prosperity depends on competitive global companies, disciplined public finances, and a willingness to cut spending when necessary. At the same time, it rejects the idea that pure capitalism is enough. It actively redistributes income and invests in public goods. It walks a narrow ridge between efficiency and equality. The uncomfortable truth is that this balance is fragile. It relies on trust, competence, and a political consensus that can't be manufactured overnight. It relies on citizens accepting high taxes because they see tangible returns. It relies on businesses believing they can still compete globally despite those taxes. As automation, AI, and demographic shifts reshape our world, even Sweden faces new pressures. If growth slows while obligations remain high, the arithmetic gets tight again. History suggests Sweden will adjust. It always has, but adjustment means change, and sometimes painful change. So, how did Sweden get so rich? Not by choosing one economic religion, not by freezing its system in time, but by building wealth first, redistributing second, and reforming relentlessly when reality demanded it. The real question isn't whether the Swedish model works, it's whether other countries are willing to do the hard, unglamorous work that Sweden did when the numbers stopped adding up. Thanks for watching. If you found this interesting, be sure to like and subscribe for more.